All right, welcome. I'm gonna do another update today since we did have some obvious movement in the market. So I might even just hang out here today since I had a little time, particularly early this morning, mountain time, at least where I'm at. So I'll go over some things and just kind of hang out. So anybody that wants to join in, hopefully you all see the link over there on Twitter. Um, yeah, and hopefully they'll join in. So give me just a few moments. I'll be right back and then I'll start covering some of this stuff. All right, so I'm gonna go ahead and begin just a little basics here. Some people have been asking me like, how do they set up their charts on some like beginner step levels? So I'm gonna just cover that real quickly, and then we'll kind of get into the updates, right? So again, you'll first thing you want to do is, of course, find the site, right? So if you look up here, it's tradingview.com. So give you your charting web, application, right, where you'll get all this data that you're looking at, right? The asset that you're tracking is located here in the upper left hand corner. So this is Bitcoin USD. This one gives you your time frame. So we're looking at D, which is a daily chart. If I were to hit this arrow, you can see where you can change it between minutes, hours, day, week, month. Okay. So that's where you get your days. And then this is the important box here. It says indicators. So when you go to your indicators, you'll see it, normally you'll see a list like this. Those are kind of my favorites. So you'll see a box like this. And then you'll want to look for um, the exponential moving averages, right? So moving average exponential is the one that you'll be looking for. I use multi EMA because I actually use, quite a few of them. So it's a little easier for me to use the multi EMA. So you can use either one of those categories, right, to pull up your EMAs and make sure it's not the moving average because there is a difference between moving average and exponential moving average, right? So if you Google moving average and exponential moving averages, what you'll find is the exponential moving averages are weighted in a way that gives more weight to the real time information or the most recent information. The moving average, or what some people call the simple moving average, is just kind of weighted towards historical price equally, right? So it's just tracking price at a time, right, over time. And this one has a little more math to it that gives the weight more to the current time as compared to the historical time. So that's where you would find your EMAs. Once you find your EMAs, they'll be over here and they'll look like this. As I said, I'm using the multi, so I have multiple ones per indicator. What you'll need to do is hit the setting button here. The setting button will give you style and inputs. You do want to pay attention to your style because you want to have them in different colors so you can differentiate which EMA you're looking at. And then your inputs is important. So here are the numbers that I use: 3, 11, 19. I'm not currently pulling up the 38 and 56 because they're not highlighted, but I do have them up there because I do occasionally look to them, which will be 4 and 5 on this list. But the ones I'm actually actively using: 3, 11, 19. This 11 you can choose, you can move to 9. I might have it currently set to 11. Again, you can, you know, tweak this the way you like, but those are the numbers, right? Close this one out, and then the rest of my formulas over here we have, and which one am I using? I'm using all of these at the current time, right? So you have your 65, 70, 80, 100, and 200. Actually, I should have the 50 up, which should be on my first one. And that one's kind of important. 5. I'm going to bring this one back in. Anyway, so that's essentially how you would set up the EMAs. Um, to get the visuals that you're looking at on the screen over here. They essentially give you all the information that you really need. The yellow line is the 19, so it's the most important thing that we're looking at here. I'm almost tempted to kind of erase everything else at the moment, but I'm going to leave everything up and we'll kind of just take a look. So give me a moment here. All right. So using the Bitcoin chart, I'm on a daily. As I explained yesterday, why we're on the daily and what we're looking at. And we essentially had play out exactly what I described in yesterday's video. So I'm going to zoom in here a little bit and we can kind of see better what's going on. So this is another thing that you do want to learn how to articulate is these plus and minus buttons. As you can see, what it's doing is allowing us to zoom in. You come over to your price bar and you can extend that out and kind of zoom in more as well. So here's what I'm going to show you all. Everything again revolves around the 19, right? That's the basis of my thesis in the trend trading that I'm doing, right? So we had a basically loss of the 19 here at 23.5, right? That was your sale point, and you just do that because it's the rule, right? And that's how your performance will be dictated using this method, is how much discipline you have. And you don't convince yourself that, oh, I'm not going to go out here because it's just going to go down 1%. It's going to probably bounce. And you convince yourself of all of these, this time's going to be different kind of mentality. If you have the discipline to just make each one of these moves, right, then you'll see how well it performs over time for you. So speaking of which, right, you would have had a day here where it went out, right? And you would have had to react to that, right? But price went down here and what we call bouncing and started coming back. So you would have went ahead and re-entered, right? Because it's just a rule as well. So you didn't really lose anything on this move. But what happened is it came back down here and you had the out again, and that was the one you were looking for. So you do have these moments where you had an out here, right? But then it recovers, right? So you could quickly go back in because you see it recovering, right? So depending on how you articulate this could be a net trade for you. But again, you just have to have the discipline to keep doing it. So if we're looking at over time, right, and this is a daily chart as we mentioned, I'll just quickly show you because I know a lot of people are like, I don't want to be trading every day. Well, I agree with that sentiment, right? So if we kind of go back here to July 25th, right? Well, you had an out, right? You had an in. So that's 2 trades. You had 3, 4, 5, and 6. So since July 25th, you had a total of 6 trades. So it's not something you're going to be doing every day. And you'll have alerts set up or limit order set up. So you can almost kind of automate some of this. Except when a trade gets executed, right? Because then you have to turn around and make your trade after that. So, but you're not trading every day. It's just a sentiment that I want to get you to see. Like this kind of stuff doesn't happen often, but when it does, you have to be prepared. Because as we see here, we don't know even where this bottom is going to stop at this point, right? It's just going down, but we knew to be out. And so as it goes down, we're profiting. It doesn't matter how far it goes down. The farther it goes down, the more you profit at this point by having your appropriate exit. So as I was mentioning yesterday, we got this cross here, the 3. So the 3 obviously crossed over the 19 and we're starting to get a pretty significant cross 9 over the 18 or 19 in this case as well, right? So this is what's giving us this accelerated momentum here on this down, so that we knew to not only be out, but it was going to be a good move out, as compared to here, right? Well, it kind of breached it, but the 3 was quickly Ving up and going back. The 9 never even threatened it. We had the same dynamics over here. The 3 went down, right? So it kind of gave us more movement to the downside than it did, of course, over here. But the 9 never threatened it, right? Until we got this quick movement back to the upside. Over here, we're getting both crossing down. So, yeah, that's how you can visualize what's going on with how to use the 19 and what's going on currently, right? So this is why it's imperative to know how to catch these outs and how important the 19 is. Just pull off our ruler and we'll see where we're at. So if we exited around here, we get around this line, we're basically an 8% increase on our exit, right? Almost 9%, 8.80. So we're about almost 9% on this exit. And we still don't know, you know, how far down it's going to go. So there is a point to where, let's say this goes down 15, 20%, that you may want to go ahead and take an entry and then look for it to reject back off of the 19, right? As it retraces up, and don't be greedy and let it go all the way back up here and then you miss this opportunity. So you want to take that in consideration. Like even this 8, 9% may be a good place, right? But if you happen to get out here, right, and then this thing starts to go back up, well, you can always put your sell right back at where you got out at, right, at 21,427 as an example. And then if price starts to go back down, you go back out and you just continue to ride it down. If you happen to make a move like that. So just take those things into consideration. Once you get this good parabolic win, don't be too greedy on, watching it go down. You can catch it and look for rejection and get back out if you have to, or if it happens to breach and go up, then you get back in. But that's where we're looking at on Bitcoin. I'll quickly go to XRP because I know most people know me from XRP, and we definitely want to take a look at that. So, all right, so here we go. XRP chart. As I mentioned yesterday, we definitely had the same dynamics play out. So we had the crosses play out. We had price lose the 19 around 37, I believe it was, or here we opened yesterday or we closed. Anyway, yeah, we were about right up in here somewhere. So we pull out our ruler on this. I'll just kind of grab it. I think we breached the 19. We'll just start at the top of this day yesterday. So we're still about another 8.97, same as the Bitcoin, almost 9% up, right? So there, here, as a matter of fact, we'll just cycle through some assets. But yeah, you get a good visual where you're at and how important knowing how to move off this 19 is. So I'll go to Ethereum. Same dynamics. Lost the 19 in profit. It's actually using this EMA as support, right? Trying to go back up through these EMAs here. We see how I use this EMA as support. That's why it's so important to have these additional ones up, even though I'm not trading off of them. Let me move this right quick. So yeah, look what we have going on here. So we have the 3s crossing this. I think this is the 100. We have the 3 just crossing the 100 and this 19. So it's giving us this downward momentum. That's interesting because if this price continues in this area or goes down anymore, probably going to complete that cross and it's going to continue to give this some movement to the downside. So each looks like it has some more to bleed off. But either way, your exit would have been 1776 and you're just waiting for see how far down you go on Ethereum. Let's try another asset. We'll just go down the list on some of these. ADA Gang. Your exit would have been around here, 52. You're down to 46. Easy play on the 19 cross. 3 crossed, 9 is threatening. Almost same dynamics as Bitcoin and XRP. Same thing over here with Solano. Got a good exit price, 42. Sitting at 36. Got the 3 and 9 crossing. Let's go BNB. BNB, your exit was around 306. You got the 3 crossings. Look like it's trying to cross twice. 9 threatening. This looks like it could continue to bleed off further. But you have a clear exit. Easy win. I know we got some XDC fans out there. I'll pull that up. Oh, let's get this out the way. XDC looks a little interesting. So we are getting a 3 crossing the 19 here. So that's giving us a little momentum down. Exit price would have been 30327. 9 is kind of threatening here. This could continue to cross here. So this could have some potential more to the downside as well, even though it is a little stronger. I guess it is. Let's kind of map that out and see what it's looking like. This hasn't gone down as much yet, at least seems like. We'll grab that there. Yeah, it's like 3%. So it's holding a little stronger against some of the other strong other high cap coins, I'll just say. So that's where you're looking at, what you're looking like on that. But you definitely should be out and seeing how far it continues to go. We'll continue to go down the list. I'm not in a big hurry today. Algorand, clear out here at 34.97, so basically almost 35. Got your 3 cross. 9 is actually crossing. If I zoom in there, it looks like a pretty good confirmed cross. Let's see. Yeah, it's peaked through there, so it's giving it all this additional momentum to the downside, and probably has a little further to go. So let's see, what does that percent look like? Grab that. We're talking about 12% down already on algo. Let's go to H bar. Three cross, 9 crossing. Percent you would have won on the H bar, exiting at the rule. Currently 13, almost 14%. If you took that exit, let's see. Maybe we got some Gala fans out there. Boom, 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 boom. Gala, whatever it is. 3 crossing 19. 9 is threatening. If it does, of course, we're going to end up giving this some more momentum. So it looks like it has a lot more to, I say a lot, but it has more to bleed off as well. Similar dynamics. Now this is interesting because it kind of led the little movement to the upside when we were in the upward trend right there for a few days. ETH Classic. So ETH Classic has broken its daily. Yeah, so that's interesting. Let's see, what is it yielding on the out over here? About 8% right now currently. And let's look at the potential cross going on. So yep, we already got the 3 breaching the 19. 9's kind of far off, so this one's sitting a little stronger. See how much momentum this cross gives, but kind of similar dynamics, but still would have yielded you, like I said, 8% on the out, holding true to the theory. We'll go to quant. You know, a lot of people were, quant kind of led the movement up as well. So let's map this one out. We see what our exit point was. So on this one, your actual exit point would have been here, right? Because you got this movement. What happened was it opened here, went back, got above, and then lost it again. So your actual exit point on quant would have been 113.6. Uh, and then when we got that exit, all of this three continued to cross the 200. The 9 is threatening here. So this looks like it definitely has some more to go. It did catch support right here on our EMA. That's why it's important to have these other EMAs up, because it can actually identify supports as well. So this probably would have been a good place to what we got going on here. This would have been a good place to catch a buy, right? So if your exit is here, right, and you see that support there, right, this is definitely your buy range. So even at where we're at now, it's 11.47%. If you caught around this area, 12%. So that was an easy 12% pickup on quant, which is looking like it potentially has more to bleed off. So what you'll be looking for on quant is if this 19 ends up crossing this 200, that'll give this some more momentum to start testing these lower moving averages here. Of course, if you lose that 95, then bam, you're definitely in a downward trend. But you want to also look for this 9 across that 19, as we've seen on other similar charts. So all the dynamics are same. All your wins are the same. They're all easy calls. You just exit the 19. It's just that simple. I've tried to make this as easy as I can for anybody to figure out and use it and manage your portfolio. It's not financial advice. You pick your asset, whatever you like. You can even pick your numbers, whatever you like. These are just the ones that I'm using. Tweak it however it makes sense to you. We will look at the dollar because we've always used that as a big indicator of where the crypto market is going. As I've always said in my previous videos, if you watched them, and everything that I have said pretty much is on pace to be as stated, right? So the dollar index, I should say, came back, broke here, 3 cross, 9 cross, accelerating this upward momentum. And we just been closing up and up and up and up and up. As I suspected, we'll probably get in the 110 to 111 range if it really, really stays hot. And I knew that crypto would stall out with this parabolic movement on the dollar. So there's not much else to be said than it is what it is. And I hope people are paying attention to this information and making themselves more profitable with managing their portfolios. It's not rocket science. I don't claim to be some super genius, some super smart guy, just an everyday type of person. I'm not trying to charge, set up Patreons, monetize sites. Like, I'm just giving you information because I want people to be able to share their information with me as well. So I'm sure there's a lot of stuff out there that you may know. But just again, like I said, I want people to be able to put themselves in profit. Don't be influenced by a lot of the easy rhetoric that may distract you. Say, well, this can't be done and that can't be done, and I'm not taking these risks and that risk. There's risk associated with any of this. And the better you are at managing your portfolio is the best way you'll ever have at mitigating the risk, particularly if you're not, relying on the efforts of someone else. And I'm not saying that in the context of securities laws. What I'm saying is that ultimately, if, you're waiting on this product to bring volume, or you're waiting for this product to mass adopt, right? All of those efforts are still outside of your own control. And so what I try to give you is information that allows you as an individual to put the keys into your hand, and have that control. What's happening with Yearn Finance? Still lower? Oh, Yearn. I don't know the code on that, but I'll pull it up. So our viewer type that in. Excuse me, I kind of looked over on my screen. Yearn Finance. I think that was just it, right? KuCoin Tether. So, yeah. Thanks for whoever asked that question. We'll bring up Yearn. So, yeah, this is what you had going on with Yearn. We had an obvious break to the upside here back July 26th. I would have made this move, obviously, right? Because by the rule, would have netted a nice increase that got stopped out right by your 200 EMA. So you can even see how it accurately identified the resistance. Fell back and started ranging. Lost the 19 with a 3 cross and a 9 threatening, just like the other charts. Did dip a little further in that it breached all of the lower EMAs already. So it's got some significant little momentum to the downside going on as this three continues to cross over the 100. Um, Looks like it's going to come down here and threaten some of these as well. So it's got some significant downside to it. Whoever asked that question, let me go back. Leroy Duncan. Yeah, so that's where that urn is sitting at. If for the person who asked that question, if you would have caught the 19, as my rule states, your exit would have been about in this area here, 1,060. And even if we just stop at current, you're 13.38% up on that exit, um, by the rule of my methodology. So great question. Appreciate you coming in over there and asking that. Sorry I didn't probably catch an invite if you wanted to jump in the screen. I'm not even sure if you're still there, if you can hear me, but you're welcome to jump in the stream and ask questions if you like. I forget how to do this. Usually it just does it itself. This allows you to request it. So, yeah, but you're welcome to, and I'll try to check back over there and look at it. But yep, that's where our dollar sits. So I'm gonna creep in here on the short time frame. We're gonna look at this dollar just as zoomed in. We don't trade off these lower time frames, but I just want to show you how, again, the method works no matter what time frame you're using. But it gives me a better indicator, like within the hour. Like, so I'm 8 o'clock my time, between 8 and 9 o'clock, what I can expect, right? And that's how I interpret these time frames. So when I go down to an hour chart, I'm thinking that this trend could turn here, and of course, trend is always your 19 within an hour, right? So what it's telling me now when I look over there, by it being above the three and moving up, right? And all of these indicators are moving in an upward direction. The strength is still moving up in this asset. So by 9 o'clock, we should still be moving in an upward direction. The first indicator that we'll have that this is losing momentum is for it to lose the three. So it's probably the weakest of your supports, of course. So we don't look at it that as a support in that way. It's absolutely the weakest one, but it still gives you your first indicator. So if you start to lose the three, you know that you'll start looking for support around this 9 or 11, whichever one you happen to be using. I'm using 11 right now. And then if we start to lose the 9, then we can start to see what's going to happen with the 19, right? But look how accurate, you could even trade off of this for the day traders, right? Would had a clear entry here when it was breaking. We had the 3 and 9 crossing, so we knew that was one of them moments, I like to call them. And boom, you could have shot that to a nice little win for dollar trade, right? And it's even down here on the dollar. So just looking in, our current trajectory is definitely still up. Even if I loop down to a real small time frame, let's do like 5 minutes. So if we zoomed in here real tight, 5-minute chart, we can see some kind of the intraday volatility. So we did have a cross going on here that ended up crossing the 19. You lost it. That would have been a short on the dollar. Came down here, caught support on our actual moving average, right? You probably wouldn't have longed this if you were trading a dollar in this kind of way, because you don't know if it's going to continue to go down. You had the three flattening out, so it was losing momentum. I probably would have just cashed out here and looked for my next signal, right? So when you're trading a dollar, your next signal, you saw the three crossing back up. You had price break here. So this would have been your actual entry if you're trading a dollar at 107. And we're seeing how that just matriculated out. You did have a breach here where you had to go out, back in, and you are where you are now. So it's still gaining strength, holding above the three, holding above the 11. It's in an upward movement, right? So you can track this over the next 30 seconds, and we should see that the next candle should open up, continue to move up. That's at least what the chart is saying. So I'll let that play out over the next 18, 20 seconds or so. Yep, watching. All right, man. Appreciate it, man. Appreciate you watching. And again, if you have any other questions, you can type them up over there. I can't watch both of these screens at the same time, so I have to kind of flip back over here and take a look at it. I can kind of look at this one though, so maybe no, I'll keep doing what I've been doing. But thank you, man, and I hope the information is useful. So booyah, we opened up green. We're threatening the three. We're losing it. So again, this is a little 5 minute chart just to see how this stuff, kind of works and looks. But you see it fighting with that three, trying to grab support. It's losing it. So it looks like gonna probably go down there and test that nine, right? There's your nine test. See if the momentum's strong or is it gonna catch support. And look like it's grabbing support. Lost the support. Test your test your 19. Your 19 will be your tradable moment here, right? Because everything pivots off the 19. Doesn't matter where you're at. So sell point would be about 108, and you'd probably be looking to catch down. Now, when you're trading the dollar, right, on your forex trade, right, you get these bips. You get dollars per bip. So even in these short moves, they could be very profitable if anybody's ever traded forex. Um, but yeah, it looks like the 19 may become support. So you wouldn't even have to exit, and you just keep, hoping it rise back up and go test those higher levels. If we do get an exit, it'll be at the 108, almost a flat 108. So I'm just gonna let that play out for a second. Got a battle going out. Got a battle going there. Let's zoom in and see where this is actually at because we ain't breaching yet. Still using this support. And it's starting to pull it back up. So looks like it's gonna hold. One minute and 20 seconds left. I'm gonna let that play out and I'll switch over to something else. But I just wanted to see y'all, let y'all see how the dynamics works on this, even in a kind of fast-paced environment down here on a 5 minute chart. And if you think it's just luck that it bounced on the 19, yeah, I got something I want to sell you. It's just really how accurate the information is, man. I've been doing it for years, so I invite people to do their own analysis, right? You don't have to take my word for anything. 30 seconds. Let that play out. Bought FYI in mid-May for 300, sold off at 2,000, waiting on that drop again. Hey man, that's what this market is for, right? You can catch you some profits, no matter how you get to the conclusions that you make yourself, right? Uh, buy low, sell high. That's what the name of the game is, right? So yeah, congratulate you on your move, and um, like I said, thank you for coming in. If the information helps you in any way to be more profitable, man, then that's what I'm here for. There we go. So we caught support on the 11 in this case, right? My actual algorithm that I didn't have to change arbitrarily. I'm not even in crypto asset right now, and it still works the same, right? Caught support on that 9. Now it's trying to move back up. So that's just how easy this works and how accurately it works. I'm gonna go over here to Bitcoin, and this is the 5 minute, right? So I'm still on that 5 minute chart. Um, we see how it tried to get a little recovery here, right? Okay, right back here, lost it. And it's all looking like we're still in some downward momentum on Bitcoin in a kind of more real time look at where we're at in a short time frame. So all this is still indicating potential more move to the downside. I'm gonna jump to a monthly chart just so you can kind of see where your ultimate supports are, because that's what you want to identify at the end of the day. I'll go to weekly first, but I know we don't have no support on the weekly. So if you were going up to the more important time frames, here's an important thing to look for, as I indicated in yesterday's video. But if that 19 crosses this 200, definitely going to go down here and test some lower lows and probably catch the support on the monthly. So this is definitely what we're watching right now. We're getting ready to get some downward momentum for sure. We don't have a cross anywhere else because the 3 didn't even go back above the 9. It read and came down. So this is all screaming prices are all going down further. We'll go to the monthly chart and we can look for our supports. So without having to change anything, make your own trend lines, all that um, very subjective kind of information, right? Um, we see that we have this support here first, so around 20,000. It would have to breach that. We did breach that. We have the most important support sitting here at about 18.7, because this is historically hasn't went past here. And when I say historically hasn't went past, I'm talking about this particular moving average. So even when we had the COVID dip, right, this light blue line became our bottom, right? It was the support that caught this thing and gave it its ability to go back up. Our previous lows are around this moving average, right? So we can see how these moving averages will identify your support. This is our lowest support historically. We've never breached that. So if for any reason we happen to breach this support, which we had a little dip under it here, right? But it wicked. But if we happen to breach that support, then you would be looking at your next support here at around, zoom in, sorry about this, 15,955, give or take. Because there is some kind of range to these numbers if I zoom in a little more, right? So we come in here and we're just going by the day, because if price starts to fall, this line is going to kind of level off too. But I'm just giving you today's number. So in today's number, 15.7, that's probably your lowest support. So I wouldn't think that Bitcoin would go any further than that. If you did take these current exits and we happen to get down in this range, it's probably a good range to go ahead and get back in and look for the retrace back to the 19 and just kind of see what happens after that. But I did want to show y'all how to find these supports so you know where the potential support is on your asset as well. And again, people may be calling $8,000, $3,000 Bitcoin. I want them to show how they're arriving to those numbers other than I feel like it may, right? Because I try to use math and math only with my analysis, and my math is telling me that even if I took the bottom end of this, right, this EMA, so we took the bottom end, consider it might flatten out, we're still looking at a 15.5, right? I'm not predicting the Bitcoin goes under 15.5, and if it does, I don't have to worry, right? Because exits would have been there, and even on some of the recent exits on the daily chart, where my exit was. I identified that yesterday. Let's go to XRP, find that support. So that's why XRP is kind of in that danger zone, because you definitely want to never lose your lowest support. And right now, right, we're in this obvious downtrend with that three doing all that crossing the other moving averages. Our lowest support is right about here at a flat 30 cent. So for no reason do you want XRP to have to lose this 30 cent range, because then at that point we don't have any supports anymore, and so it could go anywhere. And you don't want to be in that situation. So hopefully you're already out, because you had your weekly exit. If you were, doing this with me for some time, you're already out, and it doesn't really matter to you, right? Even if you took some of the daily entries back in, back in when it started to bottom out, and you're kind of in a more recent trade and you didn't get that exit way back when, your most recent exit was still here at 37 cents. So you're just picking up as it goes down. If it breaches that flat 30 cent, right, which is here, right? Matter of fact, I might just put a little horizontal line there for today. So if it happens to breach that, you probably know you got a whole bunch more to the downside, and you'll keep looking. If it does get here, then you may also want to go ahead and take the buy, right? Get back in, and then put your exit, say 29.85 or so, right? So go ahead and buy here. And then if it happens to continue to the downside, you have a limit order to sell again at, you know, 29, whatever, 29.85 or so. And then you catch more of the downside, because this is a support, right? We found it over on the monthly, but this is support. Of losing support, you definitely want to get back out. But right now, you had an easy move from here to your support, and that's what we're watching. Let's chart that out and see where we at on that move. So, boom. Currently, it's here holding at about a 9% right now and going. All right, so give me just a moment and I'll be right back. I'm gonna quickly cover some other information right quick. Give some people some time if they want to ask some questions. Maybe they see my link over there on Twitter, and I'll be trying to look out for that. Maybe you want to see another asset. Any questions? Any assets? All good. So, but I do want to cover some other information right quick. So I'm gonna change my screen here. Stop sharing that one and bring in this one. I'm gonna start with this one. So, as I kind of indicated in my previous video, um, this is cryptocompare.com, one of the best sites to kind of look at for volume information. Does give you some useful information on what's going on in the market, right? So I trade off of the TA, but this does give you some good information to know what's going on in the market, right? So as we can look right over here, we see that there's blood in the streets, right? It's one of the first things that we can visually see. Bitcoin down 8.6. Ethereum 8.6, Bitcoin 8.4, Solana 9, XRP 9.9, Binance 6.3, Doge 13, Poly 12, Cardano 12.6, Shiba Inu 10, right? And that's your top 10 assets. Okay. So we also look over here and look at the volumes. Ethereum and Bitcoin are running 1.4 billion equal volumes, but Ethereum's been running more volume last few days. So Bitcoin's trying to catch back up, but that's a very interesting dynamics. Solana is up at 300 million. There's always on any given day extreme amount of volume in this Solana, which I find interesting because they don't have a really big community. It just seems like high net worth individuals playing around in this thing. Um, they keep a lot of volume going through the coin, so it's interesting to watch. This one we know has a lot of volume, XRP, simply because of ODL, right? So no matter what the trading day is, right, it's going to kind of remain in this top um, range in volumes whenever ODL is running kind of high volumes. So utility is providing a lot of volume here, but again, traders are what price is being determined by. So no matter what the utility is, the traders are still setting price. And so that's why we're still down, essentially 10%, even though there's so much utility volume still in the asset, right? So this is an important thing to kind of know, because I try to explain these dynamics so that we don't have a lot of unnecessary hopium when we talk about ODL and these products and how they might influence price, right? It's important to know that you can still have a lot of volume, but because they're equal buys and equal sales, they're essentially net trading, right? And it's not pushing the price up, but the traders are doing that, right? And so that's why you end up having the same range of losses or gains, because the traders are still setting price. It just is what it is. Binance Coin kind of remains in this range, but it's down today, 58. Doge, for me, it's running kind of high, but at 79 million. But of course, it is what it is. It does kind of range in this range of the top 10 as well, so it's not unusual. Poly has been running in the top 5 to top 10 recently, so this is kind of average. Cardano, same thing. It's running. Let's get this back in order too, but it's running 109. Um, Kind of high volume. So your top 10 in volume are kind of some of the top 10 that you would expect. We don't really have an outlier um, today, at least. There we go. Avalanche 74, Shiba Inu at 69. So that's what we have, where most of your money is going into the market, right up in here. And as I stated, right, this is the dynamics you have going on with XRP that makes it a little bit different than any of these other assets in the top 10, right? Because it has so much utility volume, um, but yet we see utility has very little influence on price, at least at this current time. Those dynamics, of course, could change based on other stuff, but at this time, is what I want to highlight. I'm going to change here to another screen. So let me stop sharing that one. And I'm going to explain what I mean by how you can know that a lot of this is utility volume. And highlight some things that I've been watching. So this is your volume, 2 billion. So we are running some high volume, but as we know, right, a lot of that is obviously on the sales side. And that's why price is not going up, it's going significantly down. So the increased volume that came in is sellers, right? And so somebody deposited a lot of XRP over these exchanges and obviously are selling. Our tether volume is up a little bit, so it's 44%. We have been down in that 38% range, so maybe they're unloading some of this tether, right? Who knows? Or selling into tether, right? Could be both sides of that. Korea's up at 16. There's always a lot of Korean volume. This is normal. USD is kind of up 13%. Our euro is 4.75. So this is kind of up. Mexico is up right now. So the utility switch seems to be on whenever you have these high fiats like this lined up. So you got Korea, dollar, euro, Mexico, big ODL corridor. So utility switch appears to be on today. We got Binance USD stablecoin, kind of normal here, but there is some additional activity. So I assume some of this is being sold in the stable coin. Bitcoin is doing this average three, does bounce between like 2.5 and 3. So this is kind of average for Bitcoin. We would like to see this Japanese volume higher because it does typically, you know, spike up in there, I guess, when there's more money to be moved and more utility or whatever, maybe creating this overall dynamic. But I'd like to see this a little higher, but still it's in a good place at 2.5%. Another ODL user. We go down to 10 at British pound. Another ODL user running 16 million. Malaysia, 12 million. We go down to India, 10 million. This dynamics here has been existing for about a week now, if I don't remember correctly. But this stablecoin, this Hong Kong stablecoin, and the Indian rupee all run the exact same volumes over the last week. Like the numbers stay identical, right? So I don't know what's causing that, what's going on, but I have been tracking it. India showed up at running its volumes about 10 million. It went away back to zero for a while, and when it came back with these other two pairs. All right, and so I've been keeping up with that, and I'll continue to do so. Turkey always ranges in pretty high for the XRP volumes, but 9 million. Don't know of any ODL use, so we don't know what exactly that is, but it's historically traditional. Australia, another ODL corridor running 8 million. South Africa, another ODL corridor running 5.2 million. Philippines, we would like to see in the top 10. It does bounce, so the utility spigot is kind of turned down on the Philippines today. Um, and this is another thing that I like to track, right? Because when it's turned down, these volumes drop so low. Like, is this just a normal exchange volume of people who are buying XRP there minus utility? Or is this utility turned down in the 4 million range and then there's really less retail buy outside of utility? But we know that this kind of bottom range starts to run here. And when they turn the utility switch on, these can run double digits for Philippines. This is a major corridor that's on ODL. We have just heard about Brazil being added to ODL. So, of course, I'm watching this. Yesterday, this was in the 300 million range, went up to about 500 late yesterday. I mean, not million, but 800,000. It was in the 300,000s, went up to about 500,000. Now we're at 854,000. I suspect some of this is just attributed to the volatility that we have today that it increases. So I don't think that this is really any utility volume per se, at least not significantly, because I would expect to see this volume start to get into the same range with the Philippines. So if this corridor gets turned on pretty actively, I'd like to see Brazil make it into the top 10, either help push Bitcoin down even further, because I like to see Japan get above Bitcoin. I like to see India get above Bitcoin. I like to see Philippines get above Bitcoin, Brazil get above Bitcoin. So we could significantly push down the influence of Bitcoin in this asset if some of these utility corridors start to exceed your Bitcoin volume. So, and you do have some ones that can certainly do it. So Japan, British pound, India, Philippines, and Brazil. Those are some of the ones I would look for. I did skip over some like Australia. I've never seen them run that high of volume. So until I see it, I don't really expect it. Same thing with the MYR. Haven't seen it, but it is definitely increasing. This thing was like in the 1 millions in the very low numbers. Recently, it has been definitely creeping up. So I've been keeping watch of that. And if that trend continues, maybe it can start to put pressure on this Bitcoin pair as well. But as you see how the numbers can run for Bitcoin at 66 million, yeah, it'd have to be a pretty significant corridor to start rivaling these numbers. But you definitely see the effects of utility. And I think I'm going to contrast this right quick while I'm not in a rush today. And I want to, so bear with me. I'm going to change this to probably a Bitcoin chart. Wow. Figured it was going to be a long time trying to back out of here. I probably should have did this a different way. Let me see. I'm gonna stop sharing this screen. Maybe it'll speed it up and I'll come right back to the screen. I'm gonna pull up the Bitcoin chart. All right, I think I got it up now. Let me switch back over. So if we compare a utility asset like XRP to more of a, what we call a non-utility asset for the most part in this community, in this environment, um, but this is the big dog as well. So I wanted to use this as an example. Here's your Bitcoin volume by currency. So the first thing that should be very noticeable is the Tether volume. 60% of total volume being traded in Bitcoin today at this very moment is in Tether. So it's significantly different from XRP, which is traditionally in the 38%, 40%. It's 44 today because of the volatility. So even at the high end, we're 44. They're 60%. Worse is your Binance stablecoin is coming in second at 17%. So if you combine that, you have a very significant portion, 75%, 76% is just stable coins going in and out of Bitcoin, inflating, deflating the prices. It's not just retail buyer. I won't speculate on what the intent of the buyers are, but we know for a fact that it's stablecoin, and significantly so. Also, highly dollar influenced. So your next highest one is almost 12% at dollars. So you're talking about the dollar or dollar derivative makes up. If we said that was 75, we're talking about 85, probably 87% of the total Bitcoin volume. Everyone else is passive players. So we have Australia coming in at 3%. We have another stable coin. So we're probably up to almost 88%. We have 1.5% euro, 1.5% Japanese, and 1.2% Korea. We get a little bit of British pounds coming in there, and then they significantly drop off. You do have Brazil and South Africa in the top 13, but as to percentage wise, almost nothing. So between the stable coins, you're talking about, I think we said almost 78, almost 80% total Bitcoin volume is stablecoin. Like that's a significant difference between what's going on with XRP, how it's being utilized all over the world, different corridors, different percentages, right? This is all stablecoin, right? And dollars, which we know this is high net worth individuals in America taking advantage of their situation. And then you have your Australia, but big difference, right? So I hope people can see that if they make it this far into the video, because I know it's been a longer one than I normally have. But yeah, that's a significant difference. And I can pull up some more assets and you can see how this phenomenon with stable coins is similar over the other top 10 assets and how different it is for XRP being the actual ODL corridors that we can confirm through reports from Ripple and published material from the people who are using ODL that they match the corridors that I indicated when I was showing you the corridors and their percentages of influence into the currency. So I think that's significant. I would definitely want to keep pointing that out. And yeah, so that's what we have going on today. Blood is in the streets. Dollar is getting strong. We'll continue to follow it. I hope people start realizing when to take these exits and get out on these 19 drops. That's where you're going to have pick up a lot more of your asset. You don't have to be scared when you're in these bear markets, have anxious anxiety and these negative sentiments. We want to be celebrating these moments, right? This is what they're for. Make this stuff work for you. Um, so yeah, that's what we got going on. I'm trying to think if there's anything else before I end this out. I may jump back in a little later. But yeah, it's been a good day, particularly to highlight how this works. So yeah, I think I'm gonna go ahead and end it there. Uh, Thank Lee again for jumping in, asking a few questions. If you ever want to catch me over on Twitter, I'm the cashed over there as well. I'll check my DMs and stuff. I want everybody to have a nice day. Um, what do you say? Nah, Ivan Cisneros. I didn't even know you was in there. The 19. You should be able to hit a little ad button, man. Jump in the screen, jump in. I don't necessarily have to dip out. So if you got something, I'll hang out. Ivan, I'm gonna pull the chart back up. Give it a minute. Boom, 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 boom. Laughing outside something I do. Man, it's all good, man. I'm just kind of giving a little update. I know I do a lot of talking about this stuff, particularly when I'm in spaces and some other joints. So I wanted to be able to update people how well it performed. So I jumped in today and gave a little update, and it's going good. 100%. It's OC. Oh, okay. Yeah. Okay. I got you. I know the handle from the Twitter handle, so I got you, bro. Um, I did cover some basic information early in the video about how to set up the charts and stuff like that. But if y'all do have a quick question or an asset y'all want me to pull up, I'm hanging out, so it's cool. So what's the 19 to buy in? Right now we're in a big downward trend. I'm gonna be using XRP while we talking right quick, right? So we're in a big downward trend. What you will see happen over time right now, and I'm gonna eliminate these bars, is the 19, if this downtrend continues, right, it's just going to continue to go down. So we won't have an entry until it starts to get back above the 19, and we don't know when that's going to happen. But as I stated earlier, we know our monthly support is at basically 30 cents. So if we get down in this 30-cent range where I got this indicator down here, this red line, you may want to just go ahead and take your buy, right? And don't be greedy, because that would put you at about, from the exit of the 19, that would put you at, let's go map that out. That put you at about 18% win, right? So I probably take my little 19% here at 30 and look for it to retrace back up. And if it rejects the 19, you go back out. If it goes past, stay in, right? You have all that stuff going on. But I'm put a limit order at about 29.85 or so. And then that way, if it just does come back and loses its 30 region, right, we'll continue to pick up some more as it goes down past the 30. So that's how I'm playing this out. And the reason I'm saying 30, so you know, it's not just me with a feeling, a lot of stuff that I speak against. We can actually see that I only use EMAs. So my bottom or support is right there. As I said, this 30 range, 30-cent range. If I lose that here, then I'm definitely going back out and continue to pick up to that downside, because there's even no support under this. So you definitely don't want to be hanging out in this area with no lower support. You want to be out and just picking up as it goes lower. So that's where we're at on that. Let me squip back over here and look at the screen. You had a good point to buy out. Oh yeah, like it's not really a point. It's just a hard rule based on how I've developed this algorithm over time, right? So here is a weekly chart well, monthly chart actually of that movement, right? So here was buys back in January of 21 that got you to the $2 range, right? And we had some little breaches that trade in and out here, but more importantly, you had an exit here that picked you up, had an entry, you had to go back in, you had an exit here, you had to go out, and we're still in that, right? So if you were back in the day and we were following it, our exit was really back here at 70 cents, and we're just responding to the market conditions now, but the real exit was way back here. So this works historically over the life of the asset and any asset. Your entry here, your win, right? Your exit back here historically, right? You picked up all of that. You had an exit here. picked up this, you had your, if we go back in time, where was your entry, so you don't never miss parabolic moves to the upside as well. You can also identify, let's see, you can also identify that, right? So even way back here when it went on this bull run, you broke your 19 there at 1 cent, and you did what it did, right? And it just kept going. So you can use this, like I say, for the very conservative people on these monthly charts. Um, I use weekly predominantly, but yeah, it definitely identifies your support where we're getting ready to test right here. That's what we're looking at on XRP, man. Appreciate y'all coming in. What do you think about the whole Bitcoin reaching 10K? Do the charts support that theory? Great question, man. So boom, I'm gonna pull that up. As you notice, I don't have to change anything. I don't have to, subjectively say it looks like this and looks like that or any of that old other stuff, right? We just use hard math. So I'm gonna go back in time and I'm gonna ask you a question, but I want to show the performance while I'm here. So even if we go back 2017 range, actually the bull run started a little before. So I'm gonna go actually find it using nothing but my method and algorithm. If you're hard ruling it, you had to buy here because price breached the 19. That was at $324. It never lost it. So by hard rule, you never go out unless it goes under the 19, right? And I'm using a monthly chart, of course, but it's just how you can use this and how well it works. Bam, rolled the 19. You never had a threat until it essentially went to freaking 20 something $1,000. I guess it was 19 something $1,000. So you never threatened the 19 until it got way up here at $19,000 off of just using the method of my trading. You don't have to guess, you don't have to nothing. You just use the rule. That win would have caught you that, right? Now a lot of people focus on, wow, this is a significant drop before you get out because you up here at 19,000, right? And the out is really not until here. But even if you were using just this method, right? If you exited here back from the entry, you're still up a lot, right? And you come down here and you cause support right on this other EMA. But I want to go to something right quick because, again, like I said, I mostly trade off the weekly because that's the most important one, the way that I use the trade, just to show y'all that you didn't have to ride that all the way down, right? Your actual best exit from that bull run back then was here at 40. Well, no, this jumped way back. Excuse me. We were back here. All right, so your actual exit off of that entry from the hundreds and up to 19,000 would have actually been right here at about 10,000. So yeah, you still lose some from the top. You can't catch them all. And if you want to use a 9 as an early indicator or 11, right, you can jump out there, save you some as well, 12,000. The hard rule is here, right? And you can't be greedy because you entered way back there. You were literally up thousands of percent. But the most important part is not just that, it's what you get on the exit. So here, you hard rule exited. You came all the way down here to your moving average that caught this support, and you picked up 40% more Bitcoin by hard rule exiting by the rule, right? And not in a short period of time later, you had a retrace up and all this go on. You had another exit here, and guess what you did? You picked up 35% more Bitcoin. So now you're accumulating on top of that 40%, on top of this 35%, you're increasing your stack significantly over time from this wonderful entry that you had way back there, right? You end up with another exit here, and we'll track that out. And you picked up another 35% more Bitcoin, right? Right off the moving average as support again. So you know where to catch it, right? We have our next exit over here, and never threatened it again. Came all the way down here. You picked up 58% more. So all of these entries and exits over this short period of time, you had, 30, 40, 50. You made a stack just by knowing when to enter and exit the market. It's critical to be able to do this. So kind of going back to current time. All right, We are here. Your last appropriate exit would have been there, 43,000, and you sitting at all of this profit. You saw, even if you bought down here and you were thinking, okay, what's going on here, right? Got up in here and started rejecting over this. Oh, actually, the loss of this 9 or 11 would have been your clear move, right? So even if you bought down here, you had an exit here and you're back in it. Where you would see that is on the daily chart, though. So you go back over to your daily and you can see your clear exit was right there, 23.40. And we're just waiting to pick up more Bitcoin, right? So it doesn't matter which asset it is. The method works on any asset in over any time frame. So glad y'all jumped in, man. I hope that answered your question. Damn, bet you were happy there. Yeah, man. I try to explain to people, man, and I don't, want to talk as if I'm bragging or boasting, and people might throw people off a lot of times, right? So I try to be very humble when I present the information. But yeah, I mean, and at the end of the day, man, it's solid data, right? That can be provable. You don't have to take my word for it or trust me or anything, right? You can go back, look at the chart, see how it will perform historically, and you can keep up with how it performs going in the future. So, right now, like I said, we've already took a lot of those exits, right? So we're either looking forward to get back above the 18 historically, we're taking the win here, or we're watching it go down further, because obviously we know it's, the momentum, as we see from the crosses, is still all to the downside. So we're not looking for any upward movement just yet. We're going to continue to ride this down. Even if we switched over to a weekly chart, we don't see a support, right? So we're like, damn, we don't even have support over here. So, and we got a potential cross. This 19 crosses this 200, it's going to accelerate this to the downside. So if you're following along with this, be looking for this cross, and this is going to push you to lower lows. Now, I think you did ask about a $10,000 Bitcoin, and I didn't answer that question. So we come over here to the monthly, right? And again, we look back over history. During this bull run, the lowest Bitcoin got after it went up to 19,000 was it caught support on this moving average right here, right? That was its low. And then it retraced, right? So bam, we went through time. We had another down movement. This was the COVID. COVID caused us to go past our historical low, right? Because it's the first time it ever breached this particular moving average, which is kind of this bluish line here. First time it ever breached that. But when it did, it breached the next one as well, and caught at that time, which was the lowest moving average we ever had, because this one didn't exist, right? So this one had came in here and had been our lowest support, and it actually used it as support when we had our lowest dip ever and brought us down to this kind of, $4,000 Bitcoin range, right? But more importantly, that's what the support was. So as we go through time, we end up getting a new support because we get new data, right? And this becomes our lowest support, right? That can be articulated using, exponential moving averages. So now where we know where our lowest support is, right? We come to real time, and we had our next big push to the downside, right? These were our historical lows. It used to use that one, pushed right through that one, went to our all-time lowest one that we'd ever had, kind of wicked it, but used it as support. And now this same one that we caught in the COVID is the same support we're using today, right? Came here, actually got back above it during the retrace moments, right? So now this is kind of our current support at 20. We don't need to look for Bitcoin to go any further than that, right? Until it loses it. If it happens to lose that, then this is our support at 1879. We don't need to expect it will go any lower than that, unless at the time that it does, we have some kind of crosses or something going on that indicates that it might. But if it happens to lose that, then we know our absolute lowest support that we have for Bitcoin sits at, even if we go to the bottom of the line, about 15,685. So I'm making no assumptions that Bitcoin will go lower than $15,000, period. Now, if we happen to get some information that changes that, then, I'll update my information. But at this current time, using math and not opinion and feelings, I'm not making any prediction that Bitcoin goes any lower than $15,000. So hope that answers your question, man. checking my little Twitter, see what I got, see if I got any questions over there or anything going on. But I'm checking the thing too. So if y'all have any questions, and you free to hit the link, man. It should be a link that allows y'all to um, get in here, man. Let me see if I got to hit something over here to do it, but maybe it's this one. But it should be a little button that lets y'all jump in if you want to. Say, yeah, good point. It did, and thanks. Yeah, man. Yeah, so we'll keep sharing the information. Like I said, I'm not trying to put this behind no Patreons and get paid behind it or nothing like that. Well, I want us to have one of the most successful communities, man, and we'll rock it out like that, right? I know if the community continues to get successful, it'll only benefit me either way. So I ain't tripping. But thanks for man coming over, and thanks for saying that the information is useful, right? Because that's really what I'm doing it for. Um, yeah, definitely, man. Back test the information, get familiar with it on your own. You can come back in one of these and share any criticisms or opinions that you have, man. Like, um, I'm not one of them thin-skinned people, man, or whatever, right? It's all it's all good. It's just conversation. Life is good for me, so like definitely ain't taking nothing personal, man. So yeah, definitely back test it, man, and share what you learn. If you have questions or if you have criticisms, man, we'll work it out. That's one of the reasons why I kind of went public with this information after so long is because I did want to see if people could find some vulnerabilities. Because I know on Twitter, man, there are a lot of people who, come with a kind of real argumentative attitude, right? And I figured if I expose myself to the public and with some of these people the way that they are, if they found the vulnerability, then, find it, right? I'm only thing that can do is help me be better. So I'm not that kind of critical person. I don't see a button. That's odd because it should have one. Let me see what I may have to do. Send this link to your guest. Want to share? Hmm. I'm looking through it, man, but yeah, it should. At the bottom of the screen, it does say like mute, start cam, settings. Um, one of those don't say jump in or something. Because I know I can have up to three people at a time, and then I cycle them in and out. I see the different buttons that I can hit, but I think the rest of them would have to be on your interface. I don't. I'm on YouTube. Okay, yeah. See, what you have to do is that's weird though. So it's letting you comment from YouTube into this live. I didn't know it would do that. So that's interesting. I'm on YouTube. Okay, so here's what you can try, man. If you go to my Twitter page, I'm on the phone as well. See, I think it still should work on the phone, but what I like you to try is go to my Twitter page and hit the StreamYard link from my Twitter page. And that StreamYard link will put you into the StreamYard feed. And that's where you should see that link at. So try that right quick. Yeah, I can see your comments. I logged into the YouTube so I can see you were over here on YouTube. I didn't know that the comments from YouTube came up like that though. That's interesting. There you go. Now let me add them to the screen.
Oh shit! I'm about to break your views, bro. I'm about to break your channel. Can you hear me?
You might have to
Test,
unmute
test,
your mic or something. Okay, yeah, there you go.
test, test.
I can now, yeah, but I'm
I hear a delay. I hear
nah, that was me
myself.
because I had it on my phone as well, just testing it. I got shut it off.
Oh, okay, okay, okay. Oh, this is dope. I'm gonna have to try that out. Gets me, definitely helps with interaction.
Yeah, yeah, man. I had got put onto this with my Bitcoin homie, man. We used to do a lot of our business using this. So we have our morning meetups and meetings and stuff like that. It became a very useful tool.
Nice. Definitely helpful information we got posted up for sure. I was looking at the charts like, oh, this motherfucker said it was 23. I forgot what the number was. I wrote it down. And then sure enough,
Yeah, because we were on that stream that night that on Spaces, right?
yeah, where we were talking about using the CPI numbers sort of to trade.
Yeah, yeah, yeah. That's what I was telling them. I was like, at the end of the day, like the people who are making the moves might be making the moves because of the CPI. I said, but I just don't trade based on that, right? Like I'm pulling it strictly off the 19. So when it lost the 19, like you said, it was right there at the like 23.4, and I knew like shit, that's the out point. Like it is what it is.
Definitely. But I do have to get going, bro. I have to go to work.
Yeah,
Definitely
no doubt, man.
the
Appreciate you
video.
dropping in. We'll definitely link up on Spaces, man. And but yeah, thank you for dropping in.
Yeah, yeah. Catch you later, bro. Thank you again.
Peace for sure. Yeah, just dipping back over here. I'm looking at it in real time, and Bitcoin is still bleeding down. Like we had all the indicators to see what's going on with it, so we know it's just part of the business, right? We're getting these crosses, so it's just continuing to the downside. We don't have many other crosses, so this might stall out as that 9 is our last one. It's really crossing, which is actually 11. Our 19 is kind of lower, so it's a lower than these higher moving averages. So there's no other crosses to be had once this 9 continues this cross. So we might kind of stall out on some of this momentum if we're just looking at the pure chart of the move. Even here, we don't have a potential cross except for this one. So if this 19 crosses that 200, that'll be the next thing that we'll look for. It's going to continue to push us down and test that lower support that I mentioned on the monthly chart. So this is the important thing right now. If it comes down here and touches it and V's up and bounce, that would be ideal. But definitely need to turn the direction of this 19. Otherwise, all of this is going to continue to go down, right? We're still stuck in nothing but downward momentum right now. So as other traders and other influencers start talking, just kind of remember some of the things that I'm sharing with you. Sometimes I even like to take this off, like the bars, so you can kind of really get a visual of what's going on, right? So this is what you have. You have 3 point downward, 9 point downward, 19. So all these short term kind of indicators over here on the weekly are saying everything's still going down. Even if we change that to daily, nothing but down. Starts to flatten out as you get in the longer time frames, right? So maybe over, you know, this is 19, so we'll say the 38 is still a little downward, 50 probably. So up in this 60-day range over the next 2 months, maybe it'll flatten out. But all of our short term stuff tells us it's definitely still going down. Sometimes I like to do this as well and look at it that way, right? So there's your price. There was your crosses. Even had your crosses here, crosses there, price moving on the indicators. There's your price one there, right? See how price stalled out exactly at that moving average and started your crossing. So you can even look at it this way sometimes, and it takes some of the confusion out of the bars. Um, Go up to the weekly, see same dynamics. So you got your cross, right? Got your rejection, got your cross back down. So there's many ways you can kind of look at this and articulate it, but I try to do it the way that simplifies it, and most people kind of know that look, so I stick with that as well. Um, but yeah, be on the lookout for this cross there, and the rest of that is what it is, man. So again, I hope y'all found the information useful. Um, I'm gonna go ahead and shut it down. I might jump back on, cover some different information later on, or jump into a space. But I hope everybody finds the information useful, as I always say, and I hope you all prosper. So I'll update it at a later date. Until next time, peace.